Hey there, I'm Lisa Doyle with Sereno Real Estate, Christie's International here in our amazing East Bay. Welcome to our market update. Boy, I continue to get questions just pouring in about the current market conditions. So I want to share with you guys some numbers. Of course, we're giving the numbers here on our, East Bay, which is, the 580, 680, 24, and all the cities in between. So it's a pretty broad area, and the market remains very healthy and strong. We are seeing a little bit of increase in inventory, which I'll share the numbers with you, but nothing what we normally see this time of year. We're still uncharacteristically low on supply. So here we are, and I want to give you guys an overview. So we like to, of course, watch the active and pending ratio, which is, supply and demand at its greatest. So if you remember a month ago, we had 668 active homes here in our East Bay. We've seen an increase. Right now there's 1,138. So a bit of a almost but doubling in inventory. Although I have to share, that is even still low compared to what is normal. On a month ago, we had 505 active homes, homes that were pending in escrow. Today we have 698. So again, our East Bay, 1,138 active, 698 pending. So we're still stable. But if you guys remember, when the market was at its very peak, hottest point back in 2022, we had almost double the amount of pendings than we do active. So we're starting to see, obviously a little bit of a normalizing in the market, although still very consistent and active. I want to give you guys data on a few of our cities. And also, our market is very manipulated and controlled by what we're seeing in the current interest rates. And so I'm going to give you guys an update on where we look like we're heading, or at least my prediction of where we'll be heading, and some economists that are very well known, their predictions. But our numbers here, here in Danville, there are 95 active homes, 72 pending. We are remaining stable in Danville. Generally, Danville would have double that this time of year, so inventory still remains low. San Ramon is still the hotspot. It's the only city in our area where we do have more pending than active. 81 active, 82 pending, so we've definitely stabilized. If you guys remember, a month ago, there were 45 active and about 85 pending. So we've seen a little bit of what you might say, normalizing. Pleasanton, 96 active, 62 pending. And then Dublin, 65 active, 50 pending. Everywhere seeing stable. And if I didn't mention your specific city and you have questions, let me know. I'm happy to help. But like I said, the overall market, and everyone always wants to know what's going on the high end. Our high end remains pretty strong. There's 5 houses currently pending over $5 million. Highest sale in the last 30 days is a property here in Danville on El Alamo. The sales price is $6,250,000. So the high end remains strong in our area as well. Again, low inventory, pretty good demand, and markets remaining quite stable. So here we are with where the prediction is on interest rates. I'm going to show you guys a couple of slides. This first slide actually shows where we are right now. If you see the top column, interest rates right now here as of Q2, the top column on the far right, average of everyone's estimates of where we are, just the upper sixes. But if you guys look at the rest of that graph, they're looking at Q3. The estimate is that we'll be falling slightly by the end of the year. The opinion of all of the major people who track this data, they're estimating that we'll be under the 6.5. I think our rates might be better than this even by the end of the year. We'll see. I know election years tend to be a little bit wonky as far as the pressure on what would be seen as potential political pressure for the rates to come down. So we'll see. But on average, the economists are estimating that we should be somewhere in the lower sixes by the first part of next year. And like I said, I'm going on record to predict we'll be better than that by the end of this year. So we'll see. The biggest factors that influence interest rates, there's a number of things. What a lot of people don't realize is interest rates are more influenced by the bond market than they are on than what the Fed does. But of course, the Federal Reserve controls and does have some sort of influence over where mortgage rates go. But if you guys look at this one graph, the next graph, it says inflation continues to exceed the expectations, right? We were hoping that we'd have a better grip on inflation. I know when the Fed early this year announced the intent to lower rates 3 times, it was based on a belief that inflation would be more under control than it is. But if you look at the graph here, we're still significantly better than we were when rates first started rising back in the middle of 22. We were looking at a 9% inflation back then, and we're down, significant, just not as low as they are hoping. And the last slide I want to share with you guys, what it says is Today's cooler labor market data is a sign that mortgage rate relief could be on the horizon, but that will be dependent on inflation, right? We may see an unseasonably active summer and fall if our inflation improves and if they can get mortgage rates falling by the middle of summer, which is my intent, of course, our hope. But that's my prediction, that we'll see some rates coming down less than that upper sixes by summer. So if you guys have questions, let me know. You guys take care, stay well, and I hope to see you soon.